Hey everyone, welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. First, want to thank Phil S for deciding to support the channel. Thank you very, very much. Now, as always, I want to start off with the Tesla China insured numbers. Of course, I didn't give you those last week, Chinese New Year's, so we got those numbers a bit later than usual. But for the week of February 12 to 18, there were 2,600 Tesla insurance registrations. Of course, that number does seem low, but again, Chinese New Year, usually that's what happens. If we look at the model mix for Tesla sales in China during the last 2 weeks, of course, we can clearly see here Model Y still outperforming Model 3, the refresh version that is. And here, if you want a better visualization of the numbers for February, so we started the first week plus the end of January with 10,600, second week 5,700, and then the latest one 2,600. Now you might ask yourself by now, what's up with the title, right? Is Tesla really dead money for the next 12 to 18 months or so? I mean, if you watch my first video of the year with regards to Tesla, the first episode of Tesla Weekly in 2024, basically said reset your expectations. Expectations were, in my opinion, unrealistically high at the end of 2023. And if you listen to the earnings call, I mean, that was further proof that 2024 will just be a year of basically no growth. And so, if we look at the reaction of the stock, rightfully so, it has come down. Now you might say, yeah, but who cares what happens in the next 12 months? Well, who cares? The people that make the market, basically Wall Street, cares. Why should they put money into a stock that will not move or will actually decline in the next 12 months? When there are other options in the market where things have gone up 20, 30, 40, or even in some special cases 100, 200% already this year. That's what I say. Tesla could be dead money for the next 12 to 18 months until we actually see some reacceleration in growth. We had the same thing with Palantir. Palantir was dead money for a while until we saw reacceleration in growth. Now, of course, things might change extremely quickly with regards to Tesla's business because yes, the energy side of things is still growing very, very fast, has higher gross margin than the automotive part of things. Interest rates can come down quicker than expected as well, which will definitely help the auto sector. And then who knows, maybe Tesla's ChatGPT moment might come sooner than expected. What I mean by that is FSD and maybe some huge breakthrough as well with regards to Optimus robot. Could very well be. In my opinion, won't happen in the next 12 months, but I'll gladly be proven wrong. Now, going back to the main point here, the main bread and butter of Tesla's business today and probably for the next couple of years as well is still making and selling as many cars as possible. In a high interest rates environment, in an environment where people might not be so inclined to buy a new car or even an EV, which is more expensive, by the way, than an ICE vehicle. Yes, for those of you that just live in the United States, in Europe, you can get cars much, much cheaper than $30,000 or even $25,000. So that's basically my point here. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up. Subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, moving on to the European numbers here. So BEV share in Europe continues to grow with the seasonal waves. It was the best January ever with 12%. The first month of the quarter is always lower and it's increasing with each quarter. Tesla accounted for 14.5% of the BEV share in January. This is up from 10% last year and was never higher in any first month of the quarter. If we look at European car sales by brand in January, Tesla had a good January in Europe compared to last year, up 86% from 24th last year to now 19th. Market share went from 1% to 1.7%. This is due to the late deliveries in Q4, price cuts, and Tesla trying to flatten out the delivery waves at the end of the quarter. Then moving on to another Node blog post by our favorite analyst here, Adam Jonas from Morgan Stanley. Tesla sentiment check. Can bearish be bullish? He says here, our recent investor survey, 84 respondents, is aligned with the negative sentiment on Tesla shares. 3/4 of respondents believe the stock has yet to bottom, and only 1/4 see the stock as a good way to play AI. Talks here about a couple of points. Bears outnumbers bull by over 2-1. Less than 1 in 4 of those surveyed see Tesla as a good way to play the AI team. Amidst this seemingly overwhelming bearish institutional investor sentiment, we reiterate our overweight rating on Tesla with a $345 price target. I'll expand a bit more on this part. Our thesis on Tesla is that it is both an auto stock plus an energy AI robotics company. In fact, our valuation of the core auto business, $75 per share, represents just 22% of our $345 price target, revised down on January 22nd from $380. Negative developments in the global EV market very much matter to Tesla and should reasonably have a negative near-term impact on the price of the stock, as I mentioned at the start of this video. At the same time, however, we believe investors should not ignore the continued developments of Tesla's other plays, many of which are auto-related, i.e., the recurring revenue opportunity from the Tesla fleet embedded in our Tesla network services valuation, and other areas that we do not include within our $345 target, but that the market may include, i.e., Optimus, which we expect to learn much more about during the 2024 Tesla AI Day, date TBD. Now here we've got some visualization of what the people are expecting. So how do you expect Tesla shares to perform relative to the S&P from today through year end? 33% said modestly underperform, 27% said significantly underperform, 13% said neutral, 14% modestly outperform, and 12% significantly outperform, up 10% relative to the index. Of course, do share your thoughts down in the comments below. The second one, where do you expect Tesla shares to bottom before year end? 48% said approximately $150, 20% approximately $100, 7% below $100, and 25% already bottomed at $180. Of course, I would welcome prices at $150 and under. And the last one here, is Tesla a good way to gain exposure to the AI team in your portfolio? 54% said no, 24% said yes, and 23% said maybe. Basically 76% do not believe that Tesla is an AI play right now. By the way, these numbers don't make much sense, because if you add 23 to 24 and then 54, you get 101. So that's basically the sentiment right now for Tesla, Tesla stock, Tesla the company, and maybe EVs in general as well. Because now the second part of this video, I'm going to talk about EVs. We had Lucid and Rivian report. We've got some news with regards to Ford and Mercedes as well. So Rivian, they reported earnings. Stock is down 37% or so in the last couple of days. Why is that? Well, just bad guidance. The company is still losing quite a lot of money, and basically they said that 2024 is going to be a year of no growth. Now, for a company that is already losing so much money, not growing at all is not going to help the financials at all. If we look at what has been happening, it's true that before gross margin, they were negative, but at least we went from negative 81% to a negative 37%, then another small improvement, negative 36%. But then we are up now again, negative 46%. So gross profit per unit delivered got worse. Things are not getting better right now for Rivian, and especially not with the outlook that they gave us. Now, they did say that they expect to shut down the consumer and commercial lines during the second quarter of 2024 to introduce new cost savings in vehicle technologies to the R1 platform. They believe these changes will meaningfully reduce their material cost and position Rivian to exit 2024 with a much improved margin profile. And they expect to reach a modest gross profit in the fourth quarter. There's also going to be the reveal soon enough of the next Rivian, the R2. Should be interesting, but in my opinion, it just doesn't matter right now. The R2 will not be produced until 2026. By then, who knows how much money Rivian will still have on their balance sheet. They could very well go back to the market, dilute shareholders, and raise more cash. Could very well happen. Because if they don't, and they continue to burn money at the same rate that they're doing right now, without meaningfully improving their gross margin profile, I mean, it's a ticking time bomb. As I said from the start, I like Rivian. Just realistically speaking, they're not in the best position right now. So there are two things here. One, if they manage to survive, you as an investor, if you're buying right now at $10, you're going to win and win big. And if they don't, then you lose. And this is why positioning, portfolio allocation is of extreme importance. If you want to take a bet, if you want to make a bet, go ahead. Make sure it doesn't impact your portfolio that much if it does not work out. Then talking about EV sentiment as a whole, because remember, it's not just Tesla that gets impacted by high interest rates, it's every other company as well. So definitely Rivian was one of those. Then we've got announcements like this. Ford halts shipments of new F-150 Lightning EVs. They say here, Ford said on Friday it has halted shipments of all 2024 model year F-150 Lightning electric pickup trucks so it could perform quality checks for an issue it did not specify. Automotive News reported that hundreds, if not thousands, of 2024 model gas-powered F-150 trucks had piled up in storage lots in Southeast Michigan since production began in December. This is with regards to the newly designed gas-powered 2024 model F-150. Ford also told suppliers in December it planned to produce about 1,600 F-150 Lightning EV trucks per week, starting in January, roughly half the 3,200 it previously had planned. We then had this announcement here. Mercedes-Benz joins other automakers in canceling EV only by 2030 plans. I think they're all now making sure that they secure short-term profits because, as you can see right here, Mercedes also announced a new $3.3 billion share buyback program on Wednesdays. Its share price increased by 5.9% in light of both updates. I think they're all realizing right now that while maybe a couple of years back saying that we're going all in on EV, green only, look good in the headlines, now they don't really care about the headlines much because their balance sheet is seeing red, red, and red. Let's see if pulling the plug on the EV revolution, let's say, is a good idea. Time will tell. The last thing here is an investment. Bezos, Nvidia joined OpenAI in funding humanoid robot startup. They say here that Figure AI is the company. It is backed by ChatGPT maker OpenAI and Microsoft. It is raising about $675 million in a funding round that carries a pre-money valuation of about $2 billion. Bezos committed $100 million, Microsoft invested $95 million, Nvidia and an Amazon affiliated fund are each providing $50 million. OpenAI also invested $5 million. Backers include Intel's venture capital arm, LG, Samsung, and some others there as well. I wonder which other company is working on a humanoid robot in-house. And last thing here is the graph. We ended the week just under $192. The 20-day moving average sits at 196, the 51 at 210, and the 201 at $225. As you can see, Tesla was rejected a couple of times the last 6 months with regards to the downtrend line here. Right now, again, the range it can trade at would be anything from what we've seen before, 150, all the way to around $200, $225 or so. In my opinion, only rate cuts and maybe a better outlook from the company itself is going to be the reason where we will see the stock break that downtrend. I just don't think we're going to see this anytime soon. So that will be it for this video. Do you believe that Tesla is dead money for the next 12 months? Yes or no? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.